Good morning, investors and corporate. Welcome to SET Digital Roadshow Year-End 2022 Performance Review. This session will run about 45 minutes, including Q&A. Company will start the session by 30-minute presentation, followed by 15-minute Q&A. During Q&A, investors may leave your question in meeting room chat box or you raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite NR Instant Produce Public Company Limited to start the presentation. Thank you.
Good morning, everybody. Sorry for that. So we've had an exciting 2022, and I think we have a very bright 2023. I want to start off with our presentation, so let me quickly get to that. And I want to thank everybody for your interest. So this is a review of 2022 and an outlook on 2023. So we'll go through a quick summary, where we are, what we plan to do, where we're headed. And very briefly, I want to introduce you to our team and a new member of our team. So myself, CEO, Khun Panarai, CFO. Unfortunately, Khun Chirapong has come down with the flu that seems to be everywhere. So he is unable to join us. But I'd like to also introduce you to Nicholas. Nicholas joins us as our Global Head of Business as well as Chief Commercial Officer. Nicholas, UK educated, more than a decade E&Y, 2 decades C-level experience. Nicholas, if you just say like 15 seconds, hello to our investors.
Yeah, hi everyone. Just looking forward to joining NR Instant on the 3rd of April, and looking forward to come on board.
Thank you, Nicholas. So he's Singaporean and he will help us in terms of our commercialization. David, who's our Chief Climate Officer, is currently in Europe, working on some exciting things. So why don't we just jump right into a kind of a high-level summary of 2022. So we did end the year with, as you can see here from the screen, a gross profit margin of 44%, which was an increase from the previous year at 878 million. EBITDA increased as well as net profit on a year-on-year basis. I briefly talk about basically our performance. And so heading to this summary here. So in the second half of the year, especially going into October, we decided to take a very conservative stance, a very prudent stance in terms of how we ran the business. So we took the view that we wanted to be liquid. And so what we did was we raised debentures. We actually cut credit to new customers. We cut marketing spend. We became very prudent looking at all our risky customers. We focused on payables as well as receivables because in October of last year, as you all know, we didn't actually have a clear view as to where the world is going to be. And it seems like with what's happening in the banking world, that seems to happen again. And so what you'll also notice is that we didn't engage in any inorganic M&A acquisitions going into the second half of the year. And that was because we just took a prudent stance. We would rather wait to see what would happen in case we get better deals or better opportunities. We believe we ended the year very well from a performance perspective. And with liquidity, we ended the year with 800 million in basically cash, 250 in cash flow, and with more than 1 billion baht in credit lines. And so we're entering 2023 in a very strong position to capitalize on opportunities. In terms of operations, our pet food facility has actually been a tremendous success into 2023. We've received interest from global multinationals to actually move their production to our pet food factory. And we're very much on our way to being net zero by 2023. So I would say if the second half of 2022 was being about prudent and seeing what's to come, 2023 now is about capitalizing on what we've been working on And I'm actually pretty excited to tell you what we're working on. But before that, let's just do a very brief recap for those of you who don't know us, right? So for two decades, and I'm going to spend just 1 minute on this, since 1991, we have become globally popular with all the supermarkets through a strategy of flexible manufacturing. We have 3,000 SKUs across more than 600 unique products. And flexible manufacturing means we do small batch production. We make something in the morning, we make something in the afternoon. Leading into 2018 and 2020, it was all about creating value around sustainability and a very big focus on climate. And how do we reach net zero? Not just because we have to in the future, but we viewed it as a competitive advantage. Into 2020, it was about direct to consumer. We formed a joint venture. We bought, and the joint venture was with Boosted, and the focus was on buying brands on Amazon. And the whole reason we did that was because within our sector, which is specialty foods and ethnic foods, one of the biggest challenges was to figure out who is our customer. And this is one of the biggest challenges because if you've ever been to an ethnic supermarket, a Chinese supermarket, a Thai supermarket, in Europe, America, Australia, etc., you're basically greeted with very poor customer service, an elaborate maze of a supermarket. And so we wanted to be as close and as direct to the customer as much as possible. And this sets the theme for 2023. And so in a nutshell, in 2022, we had three basically SBUs. So we had our specialty food group, which is our ethnic foods and pet food. We had our direct-to-consumer, which was Amazon and domestic omni-channel in Thailand. And then we had climate action, which was plant-based foods and biomass-based carbon storage. And the biomass-based climate storage is what allows us to go to net zero in our food sector. And so if you look at what we've been working on in the past 5 years, right? It's basically a jigsaw. We've been putting the pieces together of what we want to do this year, which is we have now become a vertically integrated, climate-conscious food manufacturer. And we believe we will be the first food manufacturer to achieve product-level net zero within 2030. And that starts off with sustainable farming, carbon storage within our supply chain to achieve product net zero. We have a very strong product portfolio that feeds into basically direct-to-consumer, e-commerce, and then at a group level, what we do in climate action to be the first carbon-negative food company. And we believe that our consumers will really resonate. But within 2023, it is all about direct-to-consumer. But it's not exactly what you think. So this is what we plan to do. Our long-term goals still remain unchanged. Our strategic imperatives is basically strengthening our core food business, okay? And what that means is driving manufacturing capacity, driving volume through manufacturing, and then increasing our margin while using our existing strategies of flexible manufacturing and R&D to basically create competitive advantage. It's also still about securing our future. So getting ahead of climate regulation before our competitors, getting ahead of consumer trends before our competitors. And we believe and the way to do that is through becoming a net zero food company. And I'm sure everybody understands that climate is the world's biggest disruption. And it's already happening in Thailand. Climate tax is here. It's also about unlocking value. So this year is about unlocking value through our value chain. How do we create synergies to unlock both margin, net profit, as well as drive volume revenue? And then the last is about talent and organization. How do we build governance? How do we drive our organization moving forward to support what we want to do? And so to do that for this year, this is where we're going to be focusing our core initiatives within our 3 business units. Number 1, within direct-to-consumer, it is all about omni-channel. So if you think about Amazon, Amazon started online, but eventually they bought Whole Foods in a reverse scenario. And this is very similar to what we plan to do this year. And I'm going to explain a little bit more about this in a moment. So This year in 2023, it's about achieving spectacular growth, driving volume and driving net margins through Asian grocery channels. So in other words, building an omni-channel Asian grocery platform that drives manufacturing volumes through our factories. Number two is basically going carbon negative and actually potentially generating revenue through carbon credits. And the last is basically continuing to expand manufacturing capacity, not just in our ethnic foods, but in pet food, where we have tremendous demand, where we're trying to actually keep up with demand. I just want to spend a very short minute about this. So it seems odd as a food manufacturer, we have pet food, but actually it forms part of our portfolio. We have now pitched to many multinational supermarkets, and funny enough, pet food becomes actually a magnet in terms of our negotiation with supermarkets. And just a recap on basically where we are in terms of our group holdings. So in terms of our investments, we exited our hemp and cannabis business in basically Q3. And we still have our shares in Climate Action, in Plant-Based, and in our e-commerce companies. And hopefully we can achieve some kind of valuation event within the end of this year. We still have our retain our joint ventures where we have profit share together with PDT Group and our factory in Thailand as well as the UK. And this is where we have basically our consolidated performance, including our factories in Bangkok, in the Nakhon Pathom, and then our pet food factory in Lapali. And this is our consolidated joint ventures in e-commerce, and then our climate action company. But this is what excites me the most about this year. Our Asian grocery supermarkets is going to drive performance across all these channels. So what are we going to do in 2023 as we have very limited time? And it's very simple. So ethnic foods is 138 billion annually. UK is one of the best markets that is ripe for consolidation. We export to almost 40 countries around the world. I've personally walked 500 supermarkets in almost 15 countries around the world. I actually understand the market very well, including with our team. The UK market is ripe for a few reasons. 10% of the UK market is Asian. Some of the most popular takeaway orders is actually Asian as well. And the UK spends 6 billion per annum on Asian restaurant consumption. It spends almost 2.5 billion British pounds on ethnic food groceries. 2.5 billion pounds, one country. The Asian grocery market is extremely fragmented, predominantly dominated by single mom and pop shops with a single largest player with no more than 5 or 6 branches. Many are family run, unsophisticated with lack of technology. And we are already well connected within this ecosystem. And I want to say that this scenario actually plays out in most of the developed world. If you live anywhere, you've ever studied in a developed world, you know exactly what I'm talking about. And so, and I think the thing about 2023 is that you're probably thinking, oh, inflation in the UK, European potential recession. But I want to add something. Asian tourism is back. If you look at Chinese tourism, even through COVID, okay, it's still averaging about 1 million inbound per year. And that's only going to increase as the spigot opens this summer. And in terms of arrival by countries, it's only increasing, especially as all these different countries open up, from Thailand, Japan, Hong Kong, etc. This all drives basically Asian ethnic food demand. So let's look at what an Asian grocery store looks like. As you all are aware, and as you probably most of you have been to, this is what the global Asian Oriental food grocery store looks like. Sometimes you can't even see it. When you walk in, the design is very puzzling because it looks like something your grandmother designed, which is actually probably correct. It's very confusing, right? Where is anybody? And it's probably the only grocery store where you walk in and potentially you could probably throw up. because of the smells, the experience, like what you see on shelf. And if you think about it, this is America before Walmart. This is Thailand before 7-Eleven and Macro. But this is a story of the UK. This is a story of most Asian grocery channels around the world. And so this is our strategy for 2023. Bamboo. It's about enabling consumers to discover and enjoy Asian and ethnic foods in an omni-channel experience. This experience will be about sustainability. It's also going to be about climate-friendly shopping. So let's talk about exactly what we plan to do. So we're going to develop an omni-channel Asian grocery platform starting off in the UK. First, we're going to either acquire or we're going to build physical Asian grocery stores in the UK. And the reason and the reason and the why, as mentioned, right? They're mostly family run. They don't even have CRM, okay? Not one has basically like a CRM loyalty program. Okay, one has. They're predominantly single. We actually now have 2 under term sheet with another 2 in negotiation. And it's extremely capital efficient. It's basically a sector that's ripe for disruption. And I also want to talk about margins as well. So manufacturing margin, right, is typically say 35 to 38%. Importer and wholesale margin is somewhere between 25 to 30%. And then you have retail margin, which is another 30 to 35%. We will be the first to enter the market where we will eliminate the wholesale margin. So basically, we will be able to go direct to consumer, both online and offline, and to be as close as the consumer as possible. I cannot tell you how frustrating it is trying to do this with the current way the market is structured. This strategy, by having our own stores, both online and offline, will drive demand for our own manufactured product as well as co-packed product. We've actually gone through we've been actually preparing for this strategy for the past year. We believe that for every $10 sold in the supermarket, $1 will be able to, over time, be generated from our facilities. And what does that actually mean? It means we're driving volume through our core manufacturing business, as well as we're generating significant margin inflation because we're cutting out the middleman. It also creates tremendous competitive advantage because we are the only vertically integrated chain. We are able to offer everyday on certain products that no other retailer will be able to offer or manufacture for that matter. Be able to create full branding experiences within our stores, something that has been impossible. For 8 years, I've been trying to work with importers in supermarkets to do customer surveys, to do in-store tasting. I tell them I'm going to pay them. Their attitude is basically, if I do it for you, I've got to do it for 100 brands. And I'm like, well, how do you expect us to understand, get to know our consumers more, improve our product? And they basically says, if you don't like it, go to somebody else. And this is the market dynamics. We will be the first to actually go out there to do basically loyalty programs, to understand who our customers are. And we're going to open up this platform to our partners as well to create a very rich database. And this omni-channel experience, right, we have been preparing for the past year. We have 2 term sheets, as I mentioned. I'll talk more about this in a moment. But let me talk about what it's going to look like. So why don't we start off at the very right-hand corner? The strategy is basically threefold, and it looks very similar to a very large group in Thailand, right? So you have basically cash and carry that's focused on food service and Horeca, as well as QSR. You have grocery, which is basically targeted to Asian communities in with smaller formats. So cash and carry is about, say, 20 to 40,000 square feet. A grocery supermarket, let me change that to square meter, a grocery is probably 200 to about 350 square meters. And then e-commerce, as you know, the differentiation point is we're going to use data. We're going to have a full team working on CRM, looking at data, providing feedback with a purchasing office in Thailand that's basically purchasing through our factories, as well as Thai farmers and exporters. And I cannot tell you, when we announced this strategy, we've had tremendous interest to basically export into our stores. And that creates excitement for our stores as well. So it builds value for our consumers. And basically, we're providing a way for people to build brands in the UK, but obviously they need to spend to do that. And that creates more excitement for our brands. We're very much focused on following what the traditional supermarket's going to do. So we basically follow their footprint. And we're going to focus on central London first, and basically creating, developing our footprint that'll enable us to target all the Asian communities or people interested in Asian foods within London, and then expanding that to the greater UK within the next 24 to 30 months. It's an extremely capital efficient way of deploying capital. So our 2 term sheets will generate £40 million, 1.6 billion revenue on less than 5 billion in capital expenditure, creating 2 fulfillment centers with 1 cash and carry and 1 supermarket within the UK. We expect to close this transaction in the next 30 to 45 days. And this basically pulls all our products into the shelf, into grocery, including plant-based foods. And it's very funny, within Asian Oriental, there's almost no plant-based foods there. And actually, we have a very good portfolio of plant-based foods. In fact, I had my gyoza yesterday. So the key takeaway, so we can get into performance review of last year. In 2023, we're taking the next step, right, to generate value, capture value from our value chain, to improve margins immediately, drive manufacturing revenue, and then improve shareholder returns with a very focused strategy within the UK. This is a big move for us. We've been studying it for a while. What we're doing is we are solving systemic pain points, but all Asian exporters that try to enter the UK as well as the EU. We believe we can be more efficient because we're cutting out the middleman. We have a team in place, as you've just met Nicholas, and we've got other people in place. It's going to drive volume. We're basically going to bring the standard supermarket customer service and experience that you would typically find in a normal supermarket to Asian grocery. And we're creating that platform for exporters to export into the UK, driving a great customer service experience for our stores. And so you'll be able to very simply create financial models as we increase our store footprint within the UK and beyond. Tremendous revenue generation as well as margin accretion. And so we believe conservatively by 2023, it's going to drive a revenue to 3 to 4 billion, as well as drive very good net margins. And so our guidance for the year from a revenue perspective is 3 to 4 billion, with a GP of around 37%. We expect, because as you know, retail has very high revenue versus gross profit margin, that our GP will eventually drop as our retail omni-channel distribution revenue increases, with SG&A targeting 29%, with capital expenditure of 500 million. We actually believe that our return on equity, our return on invested capital will actually improve over time just because of the very high break-even point of our stores. So with that, I'd like to hand it over to Khun Panarai to very quickly go through basically the 2022.
Okay.
Sorry, you only have 2 minutes now.
Okay, thank you. I just wrap up quickly. For the last year, 2022, we do have we have record all the revenue from the pet food for the whole year and the Well Pack for the e-commerce for the whole year. So therefore, the sales revenue is higher than the 2021 because of this reason. And then secondly, for the breakdown, they're mostly going to be the USA and then the UK for the whole region that the higher sales. Okay. And then right now, go to the quick for the gross margin. Gross margin this year gonna be 44 is higher than last year because due to the ethnic food we had the higher margin also because of the Thai baht depreciation, I'm sorry. And then we have like the pet food, the margin is pop up in this year, in the 2022. It's helped us, the average of the margin is higher.
But I want to reiterate, I think as we go into 2023 and beyond, as our retail revenue drives, we do see a slight change in terms of our gross profit margin as we average between online and offline.
Okay, next card. And then for the SG&A, as Kunda mentioned, we have including for the e-commerce and pet, and then the pet food factory. So it's an SG&A is pump up on this year, 2022, compared with the 2021. And then the EBITDA as of result, and EBITDA is higher than the last year. And you can see the fourth quarter is a drop. With Q on Q. And then I would like to put on here for this year and then compare with the 21 and 22, we are the same page because we have like a gain on the investment that the both years we do have. And then the secondly for the service that we have provide is other income in the sector. Is I just highlight for this thing too. And the net profit for this year is higher than the last year, slightly higher, but the fourth quarter, the Q on Q is dropped from the third quarter, but it's slightly compared with the last year same quarter is lower than also because the last year fourth quarter we record like a gain on investment in this quarter, but this year we had the record gain on investment in the third quarter.
And I just want to highlight as we drive revenue and core earnings, we will still have time to time liquidity events where we're selling down our portfolio companies, which will have extraordinary income impacts.
Yeah, thank you. And then you can see the ratio. The DE ratio it popped up is one from the 2.3 from the last year to this year the 1.9. Because this year we issue bond 1.3 billion on October, and then the collection period you can see is longer term because due to the COVID. We extend some customer but we cut off some customer that we have a problem. Payment period is faster, and then inventory is pop up. And then you can see the net debt EBITDA is for the last year 0.3 to this year is 0.5 because of the bond issuance 1.3 billion.
But we will, I think over the past year, as I said, right, despite that increase, it's largely just been sitting in liquidity and waiting to see what will happen this year. And I think in hindsight, we would have still made the same decisions to be prudent with what we would do with cash and to be ready for this year. And I think given where the world is today, I think it was the right strategy.
And then we can keep on the DE ratio is less than 1.5. This year is 0.09.
I want to thank everybody. I apologize for this mix-up in terms of the QR code. Thank you for attending. We hope to speak to you soon, and do follow us at NRF Thailand. Thank you very much. Sawasdee krab.
Thank you very much.